Hi, and welcome to another daily market Forex analysis. Today is Sunday, the 10th of November. I'm going to show you what I do on a weekend just before London session opens, ready for the charts before the London session opens at 8 and 9 o'clock. So I'm usually at my desk for 8 o'clock in the morning to see if there's any trades when London session opens. So I'll be taking you through the dollar index, as well as my currency pairs, and I might touch on Bitcoin if I've got enough time. I'll try and whiz through this because I know if the videos are longer than 10 minutes, I would tend to not get a lot of viewers or feedback. So I'm going to try and keep it short and sweet. So remember, first of all, if you are trading any dollar pair, Euro USD, GBP USD, USD CAD, you name it, any dollar pair, you need to be looking at the dollar index. So we always look at the dollar index. This indicates where the price of the dollar is going next. As you know, Trump won last week, dollar shot up. So let's see if it's the same bias this week, if it's still continue to be bullish, we don't know. We'll have to wait and see till the price is broken down. So first of all, if you open your chart on the DXY dollar index and you want to start on your weekly time frame, this is where each candle represents 1 week of price action. So as you can see, the last few weeks have been very bullish. Even prior to the election, you can see that. If I just get this tool out here, where is it? To draw. You can see this area here. That was 4th of November. You see that? 11th of November. Even prior to that, where was that? That was August. So you can see since August, it's been at this weekly resistance, or well, weekly support, sorry, because you can see there's a region here where it rejected it. There's a massive candlestick here where sellers failed to push the price down. Buyers pushed it back up where it's made another lower high. So you can see these are areas of interest where prices continuously made a support region and rejected it. And you can see from this candlestick here, which is approximately 30th of September, week commencing 30th September, you can see is 1, 2, 3, 4, 5. The last candlestick, which finishes literally today, Sunday, or even Friday, you can see that it's been 5 weeks of fully bearish momentum. So you can see prices continue to go to this level here. And remember guys, I always say to you, the weekly levels allow you to, on a greater time frame, to determine where prices go next. So when prices at this support, it went to resistance. When prices at resistance here, it went all the way down to support. You can see it's been in this ping pong zone for the last, since, I think this, what's that, June 22. It's in this level here. So these are weekly support and resistance levels. Now what I want to do is, I want to show you, if I just remove all my drawings, I'll show you that we've got our weekly support and resistance levels. Okay, so now, here's a weekly support. This is the last weekly resistance. You can see here it's tapped it 3 times. I expect price in the next week to go to this region here. From then on, so from in a week's time, this time next week, which will be mid-November, even 3rd week of November, price will be here. So then we'll have to determine whether price is going to reject it and come back down, or it could continue to be bullish, and then obviously we'll have December time, Christmas time, when there's going to be low levels of liquidity throughout the market. So we'll have to wait and see how it plays out. However, this week, I expect it to continue to be bullish. So I know this week, dollar index is going up, which means EURUSD is potentially going down on a weekly time frame. However, we don't trade weekly time frames. We need to chop the price down further. So that's why we go into a daily time frame. This is where each candlestick represents 1 day of price action. As you can see, price came to this high low, which is a support level here. It's also daily, it's a daily support as well. Daily support. Sorry you guys, my writing's a bit messed up. I am using an iPad for the first time, so we'll see how this analysis goes. If it's not good, then I'll just stick to doing it on a laptop. As you can see, price again made a higher low here. It made a higher high. It made a higher low, which is this daily support region here in red. Then it continued to be bullish and be high, make another higher high. So as you can see, it breached this previous level of resistance. So what I'll do is, this is a new level of resistance here where I could potentially retrace. However, you can see Friday's price action close making a higher low. I expect it to go to this region by the end of the week. Without a doubt, price will be coming to this region here by the end of the week. Mark my words, guys. But we'll see. We'll see. So what I'll do is I'll update the charts. So what I want to do is, if I go onto the daily, I want to update my support and resistance levels. So what I need to do is, this level here, that is still a support. This is still your support region. This is still your support region here. This is still a support region here. So I'm going to leave that as it is. Why? Because you can see it made a high low once, high low twice, then price went up. This is the most recent high, so I'm going to mark that now. So what I'll do is, obviously this was the last resistance. If we update this now and move it to this region here, this is now your resistance on a daily time frame. I'll just include the wick. There you go. This is our support and resistance levels on a daily time frame. If price opens, add that to favorites. Okay. So if price rejects, come on, select it. If price rejects this region here, which is a daily resistance, I'll expect it to go down here to the daily support. This is where it made higher lows. It's a confirmed area of support. If price then makes a higher low on a daily level, on a daily time frame, it will go back here. However, the way I see it, obviously you can see here with the election day last week, there's a massive bullish engulfing candlestick here. It then made a higher low. So the last one was a bullish candlestick as well. It could be the case where it breaches the daily resistance, makes a higher low, and goes to the weekly level here. Remember, the level in blue is a weekly resistance. So now that we've established our buys on the daily, our support and resistance levels, we want to break it down further and go to a H4 time frame. Each candlestick here represents 4 hours of price action. You can see here price made a high low, it made a high, it then made a high low here, and now it's at a high. So those areas that I've circled are our levels and areas of support and resistance. So what I'll do is I'll go ahead and mark the chart, update the chart, sorry, with my yellow H4 zone. So when I know price is at these levels, I know these are high probability trading areas. You can analyze H4 throughout the day, or you can break it down further on a H1. I prefer H1. So I'm going to leave that as it is. Sorry guys, it's a bit tricky doing on an iPad. It's very sensitive even though I've got a pen. Okay, so this is your H4 support. Price is at H4 resistance. Now if you have a look here, there's a high low here and a high there. Price, when Asian session opens, it could be in a range and it could come back down when London session opens. That's what I'm saying. Because there's a daily resistance here, there's also a H4 resistance here. Price can reject it and go to this H4 support level. If price rejects a H4 support level, it can make a low high and go down further to the daily. However, because it is relatively bullish from the previous week, you can see there's a massive bullish engulfing candlestick here. I expect price to breach it, make a high low, and go to the weekly support resistance region here by the end of the week. That's how I see it. Obviously, there's a case where it can reject it and go down and be this range as well. but it's good to have different biases and ideas for the week. However, we'll have to wait and see how it plays out because it's now at a H4 resistance. It could go down. There's a likelihood it could go down to this region here, or it could breach it and go up, as I said. So that is a bias. We'll have to see out what happens when London session opens tomorrow morning. However, that is my DXY analyzed. It could go down to this level here, or it could breach it and go up to here. We'll have to wait and see how London session plays out. So that's my DXY done and dusted. My next pair will be Euro USD. So first of all, remember, you always start on a weekly time frame. This is where each candlestick represents 1 week of price action. You can see I don't start my charts from scratch every week. You can see from last week it's pretty much already up to date. How do I know that? Because as I can see here, you got your weekly resistance, which hasn't been breached. You got your weekly support level, which is this blue here. All of this blue. It hasn't been breached. As you can see, it's still respected it. It's potentially going to reject it. But you can see it's rejected it once, twice, 3 times, 4 times, 5 times. And look at this candlestick here, 6 times. So I know in the past, since January 2023, it's rejected this support region on a weekly time frame for nearly 2 years. I expect it to do it again. Look at this massive bearish engulfing candlestick here last week. Obviously, dollar index was bullish, which means USD was bearish. It's now at this level here. It could be in a range. It could just be around about here for a week or two, or it could shoot back up. We don't know. We'll have to wait and see how it plays out. However, it is approaching the daily support, the weekly support, sorry. So we'll have to see how it plays out from there. Next, what you want to do, go to a daily time frame. This is where each candlestick represents one day of price action. So it summarizes what happened throughout the day. So as you can see, my daily zones are drawn in red. These are from the previous week just gone. So I'll have to update these for this week coming. And obviously you want to do it before London session opens, so you can do it the night before, or you can do it in the day. This is my weekend analysis ready for Monday morning, so I don't have to get up tomorrow and get this done before London session opens. First of all, you can see a high was made here. That is this daily resistance. You can see a lower high was made here. That is your daily resistance. Price is in a downtrend at the moment. You can see price made a lower low. You can see price then made a lower high. Here is your most recent daily resistance. It then made a lower low. Price made a lower low. That is your daily support. Your most up-to-date levels is this one here and this one here. This is the daily resistance for the week. This is your daily support for the week. As you can see, price is at the daily support. It's also a weekly support. Remember, can't really type on this. Right, sorry. That is a weekly. Price is a massive bearish engulfing candle. It couldn't breach it and go down further. See this minus 61 fib? It could go there. It also could reject it and go back up to this daily resistance. We'll have to wait and see how it plays out, what happens in Asian session, and obviously what happens in London session when we start trading at 8 o'clock UK time. That is a situation on a daily time frame. You can see that the levels are all up to date. I don't have to update anything. This is a most recent lower high. You've got the daily resistance here. This is your most recent lower low, daily support there. Next, what you want to do, you want to go onto a H4 time frame. You can monitor the chart on a H4 time frame. You can even enter on a H4 time frame. However, you do need a relatively large stop loss. So I like to trade going to a H1, sorry. So let me just make this bigger. Again, I'm not starting the chart from scratch. I'm just updating it from the week. So as you can see, this was the most recent high, which gives the daily resistance and a H4 resistance in yellow. Price then went down because of the election. It made a lower low on a daily H4 and H4 support. Price then retraced to the 50% Fibonacci. It made a lower high, which is a H4 level, a H4 support region, a H4 resistance, and it came back down. As you can see how clear this chart is from last week, price has respected the levels as it is. This is why if you just trade supply and demand, win 4 trades out of 10, you can still end up being profitable. Price went from this level here all the way down to this level here. Price then retraced, went to this level here, which is a Fibonacci 50%. Also, you can see, looking at the left, the history, there's already a resistance region here. Price rejected it and went back down again to the daily and H4 support. That is how easy your analysis can be and how in control you can be of your emotions, so you're not upset or dealing with the trades, upset where the trend's going next, blah, blah, blah. What I'm going to do is, because this is a most recent lower high on a weekly, on a daily, sorry, on a H4, sorry, this will be the new H4 level. So this, I'm just going to drag it up slightly. You can see this is a trade from last week. This was risking 16 pips. This was risking 16 pips. Sorry, this pen doesn't work. Has a mind of its own. Well, I'm risking 16 pips here. And the profit was whatever it was. I don't know. I'll show you now if it works. Look at that. 16 pips to win 82. If you're trading £1 a pip, you're risking £161 to make £826. That was a good move. So let me just delete that now. Right, so as I was saying, this needs to be updated. This is now your H4 level. Drag it to the wick. Seems accurate to me. Your H4 support is still the same. It's still this region here. So I'll leave it as it is. Price can retrace. Where is it? See this price action here where it went back up. I expect the same here. Asian session, there could be a rejection of sellers to push the price down. And then London session, when it's around about here, look for a bullish candlestick buy to this level. That's how I see it playing out. Obviously, you remember, as I said, DXY was at resistance, wasn't it? Yes, it was. DXY is at resistance, potentially going down. So if it's potentially going down, you know EURUSD is potentially going up. So let's wait and see how London session opens tomorrow. But I expect a buy trade on EURUSD to this level here on a H4. But like I said, I'll break it down further to a H1 time frame. So let's have a look here. So now that I've got that on a H4, these are my H4 levels. Let's go down to a H1 time frame. This is my intraday trading levels now. So what I like to do, I use a Fibonacci from the low of the previous day to the high of the previous day. So remember, we're trading this bit here, which is tomorrow. This is Friday's price action here, which has already happened. So we need to get the low of the day to the high, get the Fibonacci tool from this lower low to this higher high. And I'll show you what we do next. So what I want to do is get this fib tool, delete that, get a new fib tool, which is this one here. Get it from, remember, the low, drag it to the high. I dragged it from this high low to this high high of the previous day's price action. This was Friday's price action. This is a low. This is your 0%. This is your 100%. Your Fibonacci should be here. I've done it wrong. Hold on, let me go back. Let me delete the fib. This is a thing when you use your iPad, it's so difficult to drag. Okay, let me do it again. Fib tool. Low to the high. There you go. Now it's worked. Low to the high the previous day. Price is retraced all the way to 100%. If we're looking for a buy trade, this will be TP1. This region here where it says 0%. If price continues to be bullish on Euro USD, then it would go to this level here, which is a resistance. Obviously, there's a chance where it could reject it and go back down. But let's say it goes up to the 0%. It could breach it, make a high low. We could buy again on this high low. This would be TP1 where it's minus 23. This would be TP2. Minus 61. So that's how we can predict where prices go next, where price can retrace. Fibonacci is a very good tool to use. So now that I've shown you the previous high of the day and the previous low of the day, this is our intraday trading levels. So these blue levels, these are my H1 intraday trading levels. When price comes to these levels, we buy and we sell. So I'm going to increase it because there's a large wick here just below. I'll increase that there. Price is actually in a H1 support region and a H4 support region and a daily support region as well. It's also close to this weekly as well. Price is likely to go up from here tomorrow to this region here. This would be TP1, 0%. If it breaches it, this is TP2, TP3. If you want to enter, you go into an entry time frame, which is M15. Look for a candlestick in your direction where it's made a high low and enter. And you can use this risk to reward management tool where you're risking stop loss just below the wick. It is quite a large stop loss, but that's 30 pips you're risking 30 pips to win 112. Obviously, if you go to a smaller time frame, you can reduce your stop loss, for example, to maybe 18. And if you do that, and tomorrow is this trade, you've got a risk to reward ratio of 6. So what we need to do is just wait for London session to open. Hopefully price just makes a double bottom on a H1. We enter on a nice bullish engulfing candlestick, and then we can bank 112 pips. If you trade in £1 a pip, you risk in £187 to make £1,122. Risk to reward ratio of 6, which is a very good trade. So yeah, that's my setup for tomorrow. So I'm just going to leave that as it is, and then we can go on to the next. That is my risk to reward ratio. So I'm going to leave this tool tomorrow. If price is anywhere close to this region, I'll look for a buy in my direction up to there. Let's see how London session plays out tomorrow at 8 o'clock. My next pair, I've just done Euro USD, obviously, which correlates with the DXY. Remember, DXY suggests that it's at a resistance going down, which means Euro USD is at a support region, which it is going up. So that's how we use Euro USD linked to DXY. So DXY and Euro USD are negatively correlated. When DXY goes up, Euro USD goes down. That's how you trade Euro USD. Now what I want to do is go on to my next pair, which is EURUSD. So before I do that, let me just get a drink because I'm not doing this on the iPad and I actually don't know how long it's taken me to do that. I was hoping to do this analysis within 10 minutes, but I'm definitely above 10 minutes now. So next one, Euro JPY. Let's have a look what's going on here. So always start on the weekly time frame. You can see the weekly levels are your support and resistance. Here's your support region. Price has rejected it once, twice, 3 times, 4 times, 5 times. Price has failed to go down from this level, indicates a strong level of support region here. If we go to your resistance, you can see price has rejected this level here on the 22nd of July. So price, this is a resistance level. So price will travel between these two levels on a weekly time frame. Price rejected the resistance. We can say price is bullish till it goes to this weekly resistance. If you go to a daily time frame, we repeat the process where we have our support and resistance levels. You can see price is currently in a slight uptrend where price made a lower low, then went up, made a higher high, retraced to make a higher low, went up to make a high, retraced to make a higher low, then went up to make a higher high, and now it's going back down to make a higher low potentially to this level here. It's going to this support region here on a daily time frame, a daily level. So we can assume Monday and Tuesday is going to be bearish, and then from there towards the end of the week we can expect price to go back up and continue to be bullish. We'll have to wait and see how that plays out. So what I want to do is update my daily levels. So this is still a support, I'll leave that as it is. This is still a support region. This is your most up-to-date support region here. Price is likely to retrace to this level. This is your resistance, most recent resistance level. Obviously, here is where price rejected it from. So I'll just leave it as it is, actually. I'm not going to update it. Leave it like that. Next, I want to go on to a H4 time frame. The zones in yellow are my H4 levels. You can see price made a high, that is a H4 resistance. Price is in a choppy range here, you can see all the way, if you go back here. It's a resistance there, then it breached it. It's now acting as support here where it's rejected it once, twice, 3 times, 4 times, 5 times, 6 times, and now it's gone down. So this is a good area of support and resistance on a H4 time frame. The price has respected the level. It's gone breached it and it's gone back down to this level here. You can see on the left, this is another H4 support region. It breached it, went all the way down, and now it's at this H4 support region here. So the levels on a H4 time frame are still up to date, so I'll leave them as they are. I will go on to a H1 time frame to see what's happening on an intraday trading level. So we want to get on a H1 time frame, we want to get the high of the day. So remember, we're looking at this price action here, which is Fridays. We want to get the high of the day and drag it to the low of the day using the Fibonacci retracement tool. Once we have that, we can see the fib tools. So I'm going to go ahead and do that, drag it from this lower high to this lower low, and you'll see why I'm doing that. So what I want to do, delete this, so let's have a look here. Fib tool, high of the day, drag it to the low of the day, to the wick. That is my intraday trading levels. These are my intraday trading levels in blue. Obviously, there are H4 levels in between. These are high probability trading areas where prices are on a H4 level as well. Price is currently at H4 support and a H1 support level. We can expect it to reject it and go up from here. If it does reject it and go up, TP1 would be this level here. If it breaches it, it would make a high low and go up to this level here, TP2. However, there is a chance where it could reject it and go back down. If it does continue to be bearish, it would breach the 0%, make a low high, go to this level here, which will be TP1 if you're taking a sell trade. That'll be minus 23. And then it'll go all the way to the daily and H4 support, minus 61, and it can go down further. So if you look on the weekly gives you the bias. You can see it's a massive bearish engulfing candlestick, so it shows you it could potentially still go down. If we go to the daily time frame, you can see 2 days. Last Thursday, last Friday was selling days. So because the momentum is with the sellers and price travels from daily resistance to daily support, I expect it to go down further. So we are actually looking for sell trades tomorrow. However, we'll have to wait and see how it plays out because, like I said, price can reject the H1 and go up, or could breach it and go down where the momentum is. So we'll have to wait and see. And that is my analysis done. And let's just say if I wanted my risk to reward ratio tool out and I'm taking a buy trade, that could be how it is. If I go on H4, so what I want to do is I want to update it. So this would be my most recent H4 as well. There you go. So you got H4 levels in between. I want to get rid of this one now just to make it a little bit clearer. There you go. If price rejects this H4 support, it would go up to this level here. However, like I said, it could breach it and go back down because momentum is with the sellers. It could go here. So if it's a buy, this would be my trade setup. Where I'm risking, to be fair, I might just get rid of this level as well because I just don't like it there. I like my charts clearer. I've only got 2 levels, you see. So if it was a buy trade, I'm risking 33 pips to win 193. So I'm risking, if you're trading £1 a pip, £332 to make 1,936. So that's a risk reward ratio of 5.8. That's my analysis done on EJ. Ready for the London session to open. Last pair of the day. I'm only trading 3 pairs. USD CAD. USD CAD is similar price action to DXY. I think it's positively correlated. Obviously, it's not 100% linked, but usually you can see the price does mirror the price action of DXY. So you can see it's a massive bullish engulfing candlestick. It made a higher low, and now it's going up to a higher high. If you go to a USD CAD, massive bullish engulfing candlestick last week. It retraced to make a higher low, now it's going up to make another higher high. Very similar price action to DXY. I'd say there's a slight positive correlation, but it's not 100% linked. I mean 100% carbon copy, but it can help you analyze. So always do analysis on DXY first of all, because obviously it is a USD pair. So first of all, USD CAD, we go on to the weekly time frame. You can see prices at a daily resistance here. It could go back down to this level here. If we go to a H4 time frame, a daily time frame, you can see price made just trying to make it bigger. There you go. Price came to the daily and weekly resistance. It made a higher high, then made a retracement to a higher low, where it made a daily support and H4 resist support as well. It then went back to make a higher high. And it retraced back and now it's going up. So you can see it's in a range at the moment between these two levels. It will continue to do so. It made a high low previously. I do expect it to be bullish for the next day or two. But we'll have to see how DXY plays out as well. If you go to a H4 time frame, here is your high low. Here is your high high. Here is your high low. You see how price is moving even from here. Price is moving from one level to another. So when it's here we sell, when it's here we buy. It's as simple as that. So what I want to do is I want to update the chart. So I'll get rid of this fib level and get rid of this as well. So first of all, this is your H4 resistance. This is your H4 support level here. We want to go break it down further to a H1 level, which is our intraday trading time frame. Remember, when I do my intraday trading levels, I'm looking at previous day's price action, which is this bit here. That's Wednesday, Thursday, this is Friday. So you can do it from here to here, or you can do it from here to here. Either way works best because it is a Monday. So I'm going to do it from Friday's low to Friday's high. So what I'll do is delete this, get the fib tool out, drag it from the low of the day to the high of Friday, which is previous day's price action. You got your H1 resistance level as well as a H4 support level. When price comes close to here, we'll sell, looking to go down. When price is here, we'll look for a buy, looking to go up. If we look at the DXY, which is DXY looks to be going down. So if it does go down on a H1 time frame, then we know USDCAD follows similar price action. So if I go to USDCAD, similar price action to DXY. So it could go down here as well. So if I show you my risk to reward ratio tool, if we're looking for sells, and I'm selling on the H1 intraday trading level, I'm risking 7 pips to win. It could go here because there is a strong area support level here, which is a minus 61 fib, or it could retrace all the way back to the 100%. So let's just say it retraces all the way to 100%. Obviously, I trade from one H1 level to another. If it does so, this would be my risk to reward ratio, 8.66. I'm risking 8 pips to win 68 pips. Realistically, it might not go there. It might go somewhere here, H4 zone, or it might go here. But even if it goes to the H4 level, I'm risking 8 pips, £85 to win £630. That's a risk to reward ratio of 7.4. So yeah, guys, I hope you enjoyed my analysis. I have done my analysis on DXY, EURUSD, USDCAD, and EURJPY. If you want me to monitor more trades and charts and analyze more pairs, drop me a follow, drop me a message and tell me which pairs you want me to analyze, and I will do so. Hope you enjoyed the content. Like, share, and subscribe.